When we talk about Richard Wyckoff's approach to stop-loss rules, we're really talking about something far deeper than just a technical tool. At its core, Wyckoff's philosophy around stop-losses wasn't about drawing a line on a chart. It was about survival. It was about preserving your stake in the game long enough to let probability, skill, and discipline compound into results. Too many traders think of stop-losses as something negative, a forced exit, a defeat. But for Wyckoff, the stop-loss was a trader's shield. It was the mechanism that separated professionals from gamblers. The gambler accepts unlimited risk in the hope of unlimited reward. The professional defines their risk so precisely that the game itself becomes sustainable. Think about it this way. The market is bigger than any one individual. No matter how much conviction you have, no matter how perfect your analysis seems, the market doesn't owe you a win. The only power you truly have is over your risk. And the stop-loss is the way you exercise that power. It's the way you declare to yourself, I will not let this one trade destroy me. Wyckoff believed that if you manage to consistently avoid large, devastating losses, profits will eventually take care of themselves. This is why he placed such heavy emphasis on discipline. Without a stop-loss, even the best trade ideas can turn into catastrophic outcomes. With it, even a losing trade becomes just another step in the process. But there's a deeper layer here, and this is where Wyckoff's wisdom really shines. He understood that trading isn't just about charts and numbers, it's about psychology. Most people don't place stop-losses correctly because they're afraid. Afraid of being wrong, afraid of missing out, afraid of admitting that the market has proven them wrong. So they either avoid placing a stop, or worse, they place one and then move it when the market tests it. That isn't discipline, that's denial. And denial has no place in this profession. A properly placed stop-loss isn't just a mechanical tool, it's a commitment to intellectual honesty. It's you saying, this was my thesis, and if the market goes beyond this point, the thesis is invalid. I was wrong, and that's okay. I'll take the small loss and live to trade another day. Wyckoff's stop-loss philosophy teaches us something even more profound. Trading is not about being right. It's about managing being wrong. Think about that. Everyone wants to chase the thrill of the big win, the perfect prediction. But the reality is, no trader, no matter how brilliant, is right all the time. What separates the winners from the losers is not accuracy, but survival. And survival depends on cutting losses before they metastasize into something fatal. If you protect your capital with unwavering discipline, then probability, skill, and the law of large numbers will work in your favor. I want you to imagine two traders. One risks a huge portion of their capital every time, convinced they can't be wrong. The other risks just a small portion, always ready to accept the market's verdict. The first trader might enjoy short bursts of euphoria, but eventually one bad trade will wipe them out. The second trader may endure many small scratches, but because they never risk annihilation, they're still standing when opportunity truly appears. Wyckoff always aligned himself with the second trader. He wasn't looking for quick glory. He was playing the long game, where consistency beats intensity, and discipline outlasts ego. This is why I always say, a stop-loss is not a sign of weakness, it's a declaration of strength. It's the recognition that you cannot control the market, but you can always control yourself. And in trading, self-control is the ultimate edge. So the next time you're about to place a trade, I want you to pause and ask yourself, where is the point that proves me wrong? And if the market gets there, do I have the courage to honor it? Because that simple act, placing and respecting a stop-loss, might be the single greatest determinant of your long-term success. At the end of the day, Wyckoff's rule was simple. Protect your capital at all costs, because capital is opportunity. Without it, you're out of the game. With it, even after setbacks, you still have the chance to recover, to learn, to grow. And that is the takeaway I want to leave you with. Stop losses are not about avoiding losses. They're about protecting your future. Respect them, and you give yourself the chance to endure long enough for the market to reward your discipline. Ignore them, and you surrender your future to chance. The choice, as always, is yours.